And what does that mean for equities, Bitcoin, real estate?
Yeah, great question. So, we did a statistical study on this in terms of the sort of cash on the sideline dynamic. The reality is that you tend to only see the cash on the sidelines exit the sidelines after a major market drawdown and after the cycle has been reset, i.e., we go through a recession. We've seen a drawdown going back to 2022, but that did not, that the cash on the sideline is not necessarily responding to that, at least not yet. And part of the reason for this and why I think the market conditions could persist in a bull market, kind of in a risk on type condition for a while is because it's sort of the markets are climbing a wall of worry because there is still an expectation out there that the Fed policy is restrictive, and that the further we go in time, the more likely it is that we're building up incremental tightening in the economy that's going to cause a recession. In our opinion, that's a view that is just wrong at this point in time. We thought there was going to be a recession going back to as late as late October. But once we started seeing different significant changes with respect to the productivity dynamics here in the U.S. economy, and then once we started to see that the policymakers, particularly on the Treasury side of things on the equation, were going to actually be quite supportive, both with respect to fiscal policy, but also with respect to Treasury market functioning, it became very clear to us that a recession should no longer be the modal outcome expectation in terms of late October, in terms of that pivot we made at the beginning of November. So, in our opinion, that cash is likely to be put to work, but not in the same manner that you tend to see when cash leaves the sideline. Usually you need to go through the business cycle, i.e. go through the recession, to kind of see that cash really come off the sidelines in a material way. But that doesn't mean it's not going to come off the sidelines at the margins. And at the margins is something that should continue to support asset markets vis-a-vis U.S.